Hey everyone, this is Scott with another video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in today's video, I wanted to discuss, in my opinion, the best thing that you can do to quickly grow a small trading or investing account. So if you are more or less getting started and you don't have a whole lot of capital to play with yet, I think this video is going to be very helpful for you. Now, before we get started, I do want to say that if you are interested in learning on a very in-depth level about options trading, stock market investing, and that kind of thing, please do check out my SKILLSHARE courses. SKILLSHARE is very similar to YouTube, except the content on that platform is geared solely towards education and online classes. And I've provided some links to some of my more introductory courses in the description of this video below. Now, one thing to note is that if you do want to watch my courses, you will need a premium membership on the SKILLSHARE platform. That being said, if you do sign up for that kind of membership through the links I provided in the description of this video, you will get an absolutely free 2-week trial. You can watch all my courses for free during that time. And then after your trial has ended, it's literally going to cost you a few dollars a month. SKILLSHARE is a very inexpensive and affordable platform, and I think you'll get a ton of value out of it. So please check those out. And so now getting into the core content of this video, if you are looking to grow a small trading or investing account as quickly as possible, the best way to do that is not actually through the process of trading or investing. Of course, that's important and you should be doing that, but the fastest way you'll be able to grow, let's say, a $10,000 account into $100,000 is actually through the process of depositing money into that account as often as you can. Now, that might seem kind of trivial, but let's think about why. Let's say you have a $10,000 trading account and you had a phenomenal year. Let's say you generated a 100% return. You doubled your account in 1 year. Right, this kind of return is definitely extraordinary. It's not going to happen all the time, if ever, but just for the sake of this kind of outlandish example, let's say you did generate a 100% return on your account and you doubled it in 1 year. Well, if you only had a $10,000 trading account to start with, now you have $20,000. You made $10,000 over that 1 year. I'm not trying to diminish that kind of accomplishment, but 10 grand before taxes also over 1 year is not a lot of money, right? It's less than $1,000 a month. And that amount of money can certainly help pay some of your bills, but it's definitely not going to help you retire, right? So like I was saying, even with an extraordinary year, doubling your account, if the account was small to begin with, the money that you have generated is not going to be that substantial. And so now I hope this illustrates why the most important thing that you can be doing early on is to be depositing money into your account as often as you can. Right, for example, let's say you are able to deposit $200 per month into your trading account every single month for 1 year, right? Over 1 year, that's $2,400 into your $10,000 trading account. So at the end of the year, that by itself, you now have $12,400. And let's say on top of that, you had a pretty good year trading and investing. And let's say you were able to generate a 20% return on that initial $10,000. So if $2,400 comes from just your monthly deposits, and another 2,000, right? That'd be a 20% return on 10 grand, 2,000. That combined gives you $4,400 extra dollars in your account at the end of the year. Basically, that's a 44% return. Now, of course, a portion of that return did not actually come from trading or investing, but the new amount of money that's in your account does not have any more or less significance depending on where it came from, right? Your account started with $10,000, and now after 1 full year, it has $14,400. And that's all that matters. That is now extra capital that you can trade and invest with. And that's the most important thing. And let's say the following year, right, you had a pretty lousy year actually trading and investing. Maybe you were actually flat. You generated a 0% return on that now $14,400 trading account. But let's also say over that next year, year 2, you were able to put away $300 into your trading account every single month. So now over 1 full year, that's $3,600. And so now that means at the end of year 2, your account is at $18,000 and you didn't actually generate any return from your trading or investing over that entire year. And so then at that point, in just 2 years, your account went from 10 grand to 18,000, almost a 100% return. And obviously the greater amount of money you're able to transfer into your account every month, the more quickly it's going to grow. And the more money you can generate while actually trading and investing, again, that's going to make the pot grow even faster. So combining these two things really is the key, but the most important part of those two things is, at least early on when you're just getting started and you have a very small amount of capital, the most important thing is consistently putting money into your account. Now, the one caveat I would say here is that if you are trying to generate a return by trading, whether that be through stocks or options, Forex or whatever, and you're also a beginner just getting started, just still learning how to do this properly, my recommendation would be to increase the amount of capital that you have by depositing more money into it, but I would do so in increments or stages, right? So for example, if you start with $10,000, stay at that point until you are very comfortable and confident managing that amount of money, right? Make those early on mistakes as you are still learning and trying to figure this out with a small amount of money, because through mistakes while trading, you are going to be losing money. That's just how this process works. And in my opinion, it's better to lose a smaller amount of money than everything that you have in your savings. So start small, get the hang of it, get confident, prove to yourself that you can actually generate a return on that $10,000 or whatever that small sum of money may be, and then move up to the next level, maybe $25,000. And then once you're at that point, stay there for a while. And moreover, as you are getting comfortable with that $10,000 initial starting capital, maybe in a separate savings account, you're just depositing extra money there every single month. And then once you are ready to take it to the next level, you can just transfer over that money and then get started with the next bigger amount of capital. And then maybe once you're at $25,000 for a while and you can manage that comfortably and you're able to generate a return on that, then take it to the next stage, $50,000, then to $100,000, $200,000, so on and so forth. I'm not saying your trading strategy, your mechanics and your rules are going to change much with a differing amount of capital. A lot of what you do and the way you approach the market and the way you trade is going to stay relatively the same regardless of whether you're trading with $10,000 or $100,000, but there still are going to be some major differences. Specifically, you're going to have to learn how to scale up your trading to match the account size that you are trading with. And scaling up your trading strategy is pretty much an art in itself, right? It takes a lot of time and practice to deal with greater and greater quantities of capital. And if you are constantly pumping more money into your account every month, you may find yourself in a position where you are dealing with more capital than you may be comfortable with. So whatever you have right now, get absolutely comfortable and confident with that, and then make the choice to increase the amount of capital to whichever next level that you think is going to be reasonable. And again, I just want to reiterate that is simply my recommendation for what you should be doing if you are actively managing, actively trading with your money. If you are pursuing a more passive investing strategy where you're simply depositing money into an index fund or you're buying shares of SPY or other ETFs that track broad market indexes, that kind of thing, I don't see any reason why you shouldn't just be continually depositing money into that account every single chance that you can get. But the bottom line here, the core takeaway from this is that regardless of whether you are pumping money into your account every single month or you're doing it in a more increment style, still depositing money into your trading or investing account is going to be the best way to grow it as quickly as possible when it's small to begin with. And so now this brings me to my final point of where does this extra money come from, right? How can I consistently deposit money into my account on a regular schedule? And the answer to that question is you're going to have to budget, meaning you're going to have a way to track all of your income and then track all of your expenses every single month. At least that's the way that I do it. And then at the end, subtracting the two to see how much surplus income you have left over. And I think it's very important to actually track this stuff on a spreadsheet or on a piece of paper so you can visually see where your money's coming in and most importantly, where it is going. Because seeing where all of your expenses are, all the things that you're spending money on every month, will allow you to plan out where you can actually cut costs, remove the things that you don't actually need in your life. Now, is this something you have to do? Of course not, right? If you already have a satisfactory amount of extra money every month that you want to be trading or investing with, then fine. But I'm saying if you want to maximize it, if you want to have more surplus capital to add to your account, this is something that I would definitely recommend you do, and I've done myself, right? A common example that I give is, do you really need Netflix, Hulu, HBO, and Disney Plus all at the same time? You probably don't. Chances are you're really only watching a few shows on maybe one, maybe two platforms at most, and the other ones are just burning up cash every month. So my recommendation here is if you are just watching shows currently on Netflix, then cancel your other subscriptions in the meantime. And then later down the road, if there are shows on Disney Plus that you want to watch, fine. Open up a Disney Plus account, cancel your Netflix for the time being. And my guess is you will be surprised that if you can cut costs in a few key areas in your monthly budget, you'll be surprised how much additional capital together that will give you to trade and invest with. Another example from my own life, one of the things that I have done to cut costs is, since I don't typically ever watch TV, right? If I do want to watch a movie or a TV show, I'll watch Netflix, but I hardly ever watch cable. So what I did is I cut my cable bill. I called my provider and said, I don't need cable, I just want internet. And that reduced my monthly bill by I think about 20%. That was a huge deal. So cutting costs is going to take some time, it's going to take some planning, and it is going to take a little bit of sacrifice. But I promise you, if you do dedicate yourself to doing this and just squeezing out a few extra $100 a month, that multiplied over many, many years can go a long, long way. And so now, before wrapping up here, I'm going to jump over to my computer and I'll actually show you the spreadsheets that I use every single month to track all my income and my expenses and to give you an idea of what you can do on your own. All right, so here is an example spreadsheet showing you the way that I currently track my income and expenses every single month. Now the actual expenditures you see here in terms of the numbers, these are all just made up values, but just for the sake of example, I wanted to fill some of these out so you have a clear idea of how I do this. And so in the first part of the spreadsheet, these are all of my expenditures, as you can see, and they're grouped by a certain category. So right here, these are all of my apartment-related costs. I obviously have a rent payment, utilities, pest control, internet, water, gas, power, etc. And then moving on, I have food and drink related expenditures too. When I go to the grocery store, whenever I eat out, go to a bar, I'm obviously going to have bills there. Same thing with my car, got to pay for gas, insurance, toll road. I'm also very physically active, so I've got a gym membership and other fitness related costs here. And then I also have personal care stuff and then other, cell phone, Netflix, Spotify, so on and so forth. And so it's very simple. Every single night I come into this spreadsheet, I pull up my banking apps on my phone and I see which expenditures were charged to my credit cards that day. What did I spend money on today? And then I just log those costs right here. And then lastly, before I'm done, I simply update this last updated field just so I know when this spreadsheet was last updated, so that going forward, when I do go back into my banking app to check my expenses on my credit cards, I know which ones I have already logged based on the date and which ones I have yet to log. And then at the bottom here, this is where all the summary stuff is found. And so I've taken advantage of some very simple Excel functions that will do a lot of the arithmetic for me. So this box right here, this one just adds up all of the expenses that you see in this column. And you can see that the total is $2,075.48. So that's one form of cost that I have to pay every month. I also have federal income tax. I have my FICA payment, dental, and vision for my work, my day job. So all these red numbers right here, those are all my costs. That's where my money is leaving every month. And then down here, this is where all the income comes in. So I have my gross income from my day job. And then below that, I have the take-home pay. So this is the gross income minus my taxes and my various dental and vision plans. I also have a place right here to track any cashback that I took advantage of. You know, with the various credit cards that I have, I typically redeem all my points simply for cash back. So this is one form of income. And as I mentioned earlier in this video, I do teach on Skillshare and I do get paid for being an instructor on the platform. So maybe this month I made $500 teaching on Skillshare. And so then at the end of it all, adding it all up, this would be the total profit or surplus income that's left over. Adding up all the income sources and subtracting from that all of my expenses. And again, these are all just made up numbers, but hopefully this gives you a very clear picture, a very clear demonstration of how you can create your own spreadsheet to track all this stuff for yourself. And obviously the goal is to maximize this number and make it as large as possible, to generate as much surplus income as you can to help fuel and fund your investing and trading accounts. And obviously the best way to do that is to cut the costs that you have laid out right here. All right, so that concludes this video. Thank you so much for watching. And again, if you are interested in learning about options trading, stock market investing on a very in-depth level, please check out the Skillshare courses that I have linked to in the description of this video below. And if you sign up for a premium subscription with Skillshare, through those links, you will get a free 2-week trial. And lastly, if you enjoyed this video, please subscribe to the channel and give this video a thumbs up, as I want to grow this channel as big as I possibly can so I can help as many people master their finances and become experts at investing and trading. So thanks again for watching, and I'll see you next time.